Hello Monique, welcome. Can you believe it? A third of the year's gone.
Sure, thanks, Theo. Yes, it's been a bit of a rocky quarter. So it's been just a bit more than a month since Russia invaded the Ukraine. What's been happening in markets and with the valuation of markets?
Monique, that's a complicated question. I think there's a few aspects that one needs to understand. The first point is that if you want to understand Vladimir Putin and the Kremlin's logic, go and read the speech of the 21st of February by Putin that was released by the Kremlin. It's in English, so everybody can understand it. But that gives you the deep motivation and the thought process that the Putin administration follows. So that's the one thing. The second point is we don't know how it's going to play out. And as we've said on numerous occasions, to manage your investments on your ability to predict an outcome of something is a very difficult exercise. And chances are not only are you going to get it wrong, but you're going to get the reaction of markets to that outcome wrong. So rather not try to predict the outcome, rather work on your portfolio in terms of diversification and in terms of managing the risks. Now, in terms of our overseas portfolios, there's two elements in that portfolio. The one element is a passive element. That means it follows the movement of the market, of the indices. And for that portion, the key is to get the performance of the index at a low possible cost for clients, for investors. So that's the one element to it. That gives you diversification. And you need to understand that only about 25 or 30% of managers, portfolio managers, actually manages to outperform this index. So there you know you're going to beat 75% of all active managers. On the other side of the equation, we have active managers. And those active managers are being paid not to follow the index. They're being paid so that their performance will be different from the index. There will be times that they outperform, there will be times that they underperform, there will be times that they take more risk, or there will be times that they're more risk averse. But that's why we have the balance in the portfolio. So from our portfolio point of view, we believe that the best way not to have to make predictions is to structure the portfolio in such a way that you not only diversify the risk, therefore there's no single element that takes all the risk, but you diversify the income streams and the asset basis of those portfolios. And that's the methodology behind that. The other point is, how will this Ukraine-Russia issue play out? I think a lot has been made about the impact on agriculture. What we do know, it will lead to higher prices. But we must be very careful. Only a very small portion of grains worldwide are actually exported. So although Ukraine-Russia makes a big portion of the exports, if you take total grain production and you add that up, exports is a small portion of the total grain production. People must just be careful not to get confused with the stats. The second point is, yes, it will have a big impact on energy prices, specifically in Europe. Europe are dependent to a large extent on gas and oil from Russia. It'll have a very limited impact on America. Russia is something like 0.4% of America's exports. It is something like the fourth biggest trading partner of the US. So it will have a small impact. Where the impact is logistics. Again, like with COVID, logistics is the major impact. And that logistics we saw now with COVID, how logistic lines got scrambled. Your problem with logistics is goods have established markets, established logistical routes, and established way of getting from the producer to the end consumer. Those lines will be muddled. That also goes with let's say food distribution. There's certain fixed food distribution channels which will come under pressure. But having said all of that, from our point of view, looking at where the rand is now, the rand is nice and strong in terms of our house view. Where do we stand in terms of our strategy when we invest in overseas markets currently?
So if we look at the taking money out of the country, anything below 1550 is a good rate.
That's against the dollar.
Against the dollar. to take money offshore. We're comfortable with that. So at current levels, we are happy for clients to take money offshore. But once it's offshore, depending on the amount, we recommend a phase-in of about 6 months. Just because markets are still quite volatile, and we don't want to buy in and then there's a big drop in the market.
So, but the point is, it's not that we're stopping. We take the money out at these levels, and then we actually actively invest those funds in the next 6 months.
Yep.
But we rather take the view that there's an opportunity in volatility, but we put it into the market in those 6 months. We certainly are not taking money out of markets. No. You only change that policy if there's something major changing in your own situation, not in terms of the markets.
Yeah. So the only time we'll actually make a change to a client's strategy is when there's something big that's happened in their lives personally, not something that's happened in the markets that's out of our control and out of their control. So we make changes when something in their life has changed, whether they're immigrating or having a baby or just moving from Johannesburg to Cape Town. That's when we'll discuss changes in strategy if necessary.
At this point in time, there's nothing that make us change our offshore methodology, our offshore investment structure. We're happy with the building blocks, and we're happy with both a diversification from a risk point of view and a growth point of view.
Yes. So when we'll change a client's offshore strategy, whether they invest, for example, 50% or 75% offshore, is if they decide, now it's set in stone, we're immigrating. Then we'll say, okay, stop all South African investments, and now we'll focus on offshore investments. That's a change in strategy that we might recommend for a client that's planning to immigrate.
Well, and then the local market's been interesting. If you look at what has happened in the local markets, I think we mustn't underestimate the shift in asset allocation. Naspers and Prosus is basically 50% of what it was a year ago. Those shares halved. So there's been a lot of capital flowing out of those shares into the rest of the market because we're not far off the higher levels we've seen in the last 3, 4, 5 months. We are at those levels, but there's been a massive shift in terms of asset allocation within the local markets. We still believe that if you look at our local market and you look at various methodologies of valuing the market, there is value in our market. So at this point in time, we still believe our market offers value. We believe that we will get, and if you just look at the last 3 months since the beginning of the year, the results of companies in various sectors, if they're banks, insurance, obviously the commodity shares did exceptionally well, retailers, we are seeing very strong results from all of these companies. And that's because companies have restructured themselves, have sweat their balance sheets, has refocused their core business. So we're seeing great results, and we do not believe the local market is expensive. We actually believe the local market offers opportunity. So Monique, our view, if you look at the local market in terms of new money, how do we approach that?
So that phasing period is a bit shorter because there's just a lot more value in South African markets. And so we shortened that to 3 months. So it means that over 3 months, we'll phase it into the market. And it's also just to combat some of the volatility, of the short-term volatility that we might see in the market.
So just to get to the crux of it, offshore, if you're below your weighting, we believe this is the current exchange rate that you should take money off. Offshore money, we will implement over the next 6 months. But the key is, it's not that we're not doing it. We're actually implementing because we believe this is not the time to take money off the table. It's actually to put money in the markets. We just take a bit of a longer view because of valuations and volatility. Local market, if you're underweight, if you need to put money into the equity market, we take a shorter timeline of about 3 months.
Yes.
Well, Monique, thank you very much. Let's hope by the end of April, end of May, some of these tragic events in the Ukraine has started to resolve itself. I've got no idea where it's going to go, and I don't want to make a prediction, but I think we all hope that the tragedy that's happening in the Ukraine will come to an end sooner rather than later.
Thanks, Theo.